Good morning, traders, and welcome to another session where I, as the CEO and founder of Perdeck Capital, a proprietary trading firm, will be passing my own evaluation challenge. So going through the entire evaluation path to the simulated funded account and ultimately trading the live account. I will be showing you the entire process and will show you how you should approach it, because there's a really tight risk with this accounts. You only have a drawdown of, depending on what account you trade, $2,000, $3,000. That's not a lot of risk that you can take, but the potential to the upside is high. So you need to start small, start slow until you have enough risk available and you feel and you're confident enough with what you are doing, with your strategy, with your approach, with your edge. And then you can increase and make a lot of money. And that's what we're looking for. We're looking to grow our trading desk, our remote trading desk, and build an elite team of traders. So in this series, I will be trading my regular strategy, which is I mainly look for breakouts, breaks to the upside, breaks to the downside. But I will start from scratch. So I'll be showing you in the beginning what you should do, which is to look for key levels and look at volume and general price structure. And then as we go deeper and deeper into the series, we will be looking at different tools that will help us get more confirmation to have a higher probability to take high probability trades by taking the footprint into account into our set of indicators and tools we use to get a better picture of the data that we see, and other tools, order flow, and so on. So now let's first start at the daily. As you can see, right, yesterday we popped up above 600, heading towards 800 right now. Let's look at the 4-hourly. Generally on an uptrend, small pullback here at 800. What we can see, let's go into the 1-hourly. There we can see, okay, at least the past hours until we got the bounce off of 700 down here, we have been in a downtrend. Popped up above 800, rejected at 800, and then pushed down to 700. So here, I usually to get a better idea of what direction I'm focusing on, because I primarily follow the trend instead of doing counter trend trades. But it depends, right? It all depends on what opportunities I can get. That's why it is always important to first look at where we are at, right? The past days, we have been in a clear uptrend. Now, the past hours, at least, we've been kind of grinding sideways below 800, moved into 700, and yet to wait what will happen. So let's go into the 15 minute to get a better idea of what is happening in short term. Okay, so we pushed down into 750 and now we're about to pop up. So what I would be looking for is a break through the 80s here. And that is the first level that I will put on the chart. So I would be looking for a break of 80. Then the next key level is right around here, 43.40. Now let's look into the 5-minute, because the 5-minute is where I will be watching the trade once we are in a position. And here on the left, I have the 22 range chart, which is where the chart is where I execute my trades basically. So now I'm going to be putting a limit order right here at 81. So if we manage to push through 80, I would be taking a long, and I would have moved my stop down here at 60. That is what I'm currently looking for, but we could also get a push lower through 40s into the low of day, which is right around 700. I have no clear buys here. I'm nor long nor short. If I just look at Exactly. That's how it is. So then I have 5 contracts for the initial position that I will be taking. And that is also what I want to talk about today. And I want to talk about position size and what the right approach to making more money with trading is, right? And with sizing, and because like a really big mistake that a lot of beginning traders do, especially when you're in like trading an evaluation account or also a funded account where you need to reach a certain profit target in order to take your first payout or whatever. Big mistake that a lot of beginners make is taking more trades to make more money. That is the biggest mistake that you can make, especially if you already have a clear strategy, if you have an edge, and you already know at what times of the day it works the best for you, and so on. And even if you haven't clearly defined all of that, when I'm now talking about it, you probably think, yes, there's a certain time of the day where I perform best. And that is why you shouldn't. It's not only about no setups occurring, it's also about the energy, right? Because a lot of volume coming in right here. It's the highest spike in volume right now, right around 70. So we gotta closely watch this. As I said, I'm looking for a break through 80, but since I'm not too confident with this setup right now, and we've been grinding sideways here for quite some time, I'm not taking any early position. And now, like what I feel short term by just looking at the price action, I'd rather either go for a short. But I'm not going to take any trade here because I don't feel comfortable taking any position right now. And now it seems my chart is free, like my price is freezing. But yeah, let me continue with the topic, doesn't matter. And my internet connection is having some problem, but no problem, because we're not in a position right now. Would have been a problem if we would have gotten filled. Okay, now my internet is back. And yeah, as I said, taking more and more trades is not the way to go. Let's say I get a really good trade here today, and then the next trade doesn't work out. And then maybe the next trade works out again, and then I'm at break even. Then I've already put a lot of effort and energy into this trading session, into the day, and I'm not feeling that clear anymore as I did in the beginning. I might not see the price action that clear anymore. I already have a certain level of stress in my system because, depending on how you trade, like how it's not the same for everyone, but there's a certain level of stress with trading, absolutely. And everyone has a personal threshold until you reach a point where you don't have enough energy anymore, and you're not able to control yourself so good anymore. So the best thing to do is really just just be really patient and wait for your trades to play out. Don't take too many trades. Don't enter too early. Have your idea clearly defined and wait for it to play out. And then it will either work out in your favor, or it will not work out and go against you, right? Then you might ask yourself, okay, but I want to be able to make more money and grow more with my trading. Then what do I do? Yeah, pretty easy to answer that. You will increase size, right? Instead of taking more and more and more trades, you just increase size. But also, you need to do that at the right time. You need to do that when you know that you have a clear edge, that you are already profitable. Then you will scale, increase size, right? And right now, I don't know what day I'm at, day 6 or whatever, with this challenge, and I'm still not increasing size. Because first of all, I have a trailing drawdown right here. And with a trailing, as long as you're within the trailing drawdown and you have a clear max risk that you take and max size defined, then you should never increase it, because the drawdown is trailing, so you will not have more room. Only when you have more room, then you can increase your position size. So if you have an end of day drawdown as an example, which I actually have with this account, then this would be something that I could do. So let's say I'm up $500 on a day. So let's say that will allow me to risk 0.5% more. Then I might be able to take another micro contract. And you need to approach it the same when it comes to your account balance. And then the second biggest mistake a lot of traders do when increasing size, they jump in too big size, right? So if you're trading 5 micros on average, you don't increase by adding another 5, because that is an increase of risk by 100%. That is insane. You can't do that, right? And with minis, it's even worse. Let's say you're trading 1 mini on average and you say, okay, now I'm going to size up. How are you going to size up? Are you really going to put on another mini? That means, again, you're increasing your risk by 100%. That just leads to failure. It's that will never work out well. Never. I can tell you that. Might work out for a professional, but for a retail beginning trader or average trader, inexperienced or experienced trader, just still in the first few years, that wouldn't work. Increasing risk by 100%. You need to look at it as, let's say you have a $50,000 trading account funded with real life capital, your real money. And you are trading 1 mini with that. That would mean for you, in order to be able to trade another mini, if you have calculated your risk like that, if you know, okay, I can risk no more than 1 mini. Okay, now I need to focus because I'm in the position right now. Now it's about managing the position. First, I will place my stop. Next, I will place my take profit because I just got filled right here. I'm looking for a move into 800, not really looking for something too big, because I'm actually with the price action here, not that confident that we will just push right through 800, but it might happen. So I will closely watch volume right here. Look at how we are reacting to that level, to 800. Popping into 800 right now. I will now start trailing my stop loss, actually moving my stop here to 800. And now got filled here. And yeah, that's it. Good. That was that trade that I've waited for. But I want to go back into the topic. What was I talking about? So yeah, you don't increase risk by 100%. Let's say you have a $50,000 live trading account, and that is the maximum that you want to risk. That is what you have defined, what you want to risk. Then can I switch to cam now because you don't need the chart? No, this didn't work. No, we had a black screen, whatever. Then you don't want to risk more than that, right? Because that would mean that you need to put another $50,000 into your account. And this is not how it works. This is because you can't do that, right? And that would mean that if you trade 5 minis, you need $250,000 in your account. But a lot of traders in the beginning, that is exactly how they treat evaluation account or funded accounts. They start off with one mini, feel confident with it, feel comfortable, can manage the risk. And then on the next day, just without doing any calculations, add another mini. That's not how it works. And the worst thing with sizing is increasing size when you are already in a drawdown. And when I review all the accounts, whether it be live accounts, simulated funded accounts, or evaluation accounts, that is the number one thing I see. You're going into a drawdown, you've already lost money, and then you increase risk because you want to make all of what you lost back. That will lead to in 95% of this happening, just leads to account blowups. You might get lucky and get a perfect timed entry to scalp and with that large position size, but mostly it doesn't work out, right? Because let's take a look at it. You have to find your clear risk, which is 1 mini. You lost $500. Now you're increasing to 2 minis, so you're risking 100% more. So the likelihood that so now it's much more likely that you will blow up your account, because because now with a move against you, where you previously would have lost $500, now all of a sudden you're losing $1,000. And that means if the move only goes 50% against you instead of 100%, what you have initially defined, it won't work out, because now you can't take your 20-point risk. Let's just look at the chart here, right? So, I have my 20-point risk, entry at the 80s, putting my stop here at the 60s, right? That was my trade right here. That was my position. Now, if I would have gone into that with 10 micro contracts, so I would have increased risk by 100%, then I would need to place my stop here at 70, which is a really tight stop. I mean, still kind of valid if you say, okay, if we break below 80, then whatever. But that is not how it works. You need to give your trade, you need to give it a little bit of room, because let's say I could have entered here already. Let's say I would have went long 70, which would have been a thing. Then with a 20-point stop, my stop would be at 50. And then with a 10-point stop, it would be at 60. So that doesn't work anymore. I would have gotten stopped out, but this would have worked perfectly, And that is what you need to look at. Increasing size too early leads to ultimate failure. So what do you do? Let me actually switch, just show you the numbers here real quick. It's like really easy. There's not much explaining that needs to be done, right? It's just easy math, right? You have 5 micros. You're risking 20 points. That's $250 trading micro contracts, right? Here, that is a 10% risk if you have a drawdown of $2,500. So you can hit the daily loss limit or whatever, your max risk here, 10 times before you lose the account. Now, if you're saying, now if you're confident for whatever reason, or because you've made some losses, now you want to size up, then you say, okay, I'm increasing to 10 contracts now. And that means you're now with 20 points risking $500 on the same position where you previously only risked $250. Now all of a sudden that's 20%. Now you can only hit the max drawdown 5 times. Not the max drawdown, the daily loss limit 5 times. And then next step is let's add 15 contracts and then you go crazy. And that is, not the way how to go about things. And that happens to a lot of traders when they're in tilt. They might size up all the way to 50 contracts. Now, all of a sudden, if you hit with the same 20-point move, now all of a sudden, you're down your entire drawdown. So how should you increase size? Contract by contract, right? So previously with 20 points, you risk $250, now $300 because you increased by 1 micro contracts, putting a risk of $50 more on, right? But then you should only do that. You should only do that if your drawdown is not 2,500 anymore, but is 3,000. So that it's not 12% risk, but that you stay at your 10% risk, right? Because we define the risk limit, the risk parameters, the risk limits for a reason. You can't go from 10% to 12%. You can go from 10 to 8. That's not a problem. That's good. From 10 to 5. And as you increase size, like as you make more and more money and you largen your drawdown, let's say we have some good days. Now all of a sudden we've increased our drawdown all the way to $5,000. So we increased it by 100%. Account growth by 100%. Now, that means that our risk here is also just 5%, which is perfect. And ideally, we need to get this all the way to 0.5 or 1%, right? Which would mean that we would need to increase our account to at least $25,000. So that so that with one trade we only risk 1%. 1% of $25,000 is $250, right? Where we won't stay at the 10% and then risk $2,500. No, that's not what we're gonna do. We need to make sure that we always trade with the same risk parameters, no matter what account size we are at. And it can also go the opposite direction. If you're losing money, you decrease size. You won't trade the same size. Let's say we cut the drawdown in half. Now, it depends, right? If you just lose $500, then just stay at your risk parameters because, because obviously if you decrease your risk, you will also decrease your potential gains, right? So if now on a 20 point move, you're only trading 1 micro instead of 5, you will just make $50 instead of $250, which will make it harder to get back to the drawdown. So if you're within a range of 30% in a drawdown, you should still trade the same parameters. But if you go below a certain drawdown, which is like 50%, which is what we usually do with the $3,000 life accounts, then you need to make sure that you decrease your risk, right? So from 5 micros, you go to 4, you go to 3, and then you go to 2, and then maybe just even size in and out. So yeah, that's basically how to go about it to make sure that you always trade. You always trade within your risk parameters. So let's look at this beautiful move here. Let's do a trade recap now. So my idea was either a break through the upside of the 80s or to the downside 740. I did not have any buys here. Like I wasn't sure. The past hours we've been in a downtrend. Like from start of day, but then the past few hours, like the last 2.5 hours, we've been just grinding kind of upward sideways here off of 700. Nothing too special now and moving into 800. So I wasn't really sure in terms of direction. I was pretty open to trade both sides, but as you can see, the moves down to the downside are also pretty aggressive as we getting a pretty aggressive rejection here at 820. So yeah, as you can see right now, we're pulling all the way back here into where I had my initial entry. That's why I also, again, quick note, I don't like to hold onto positions for way too long when I trade NQ because, it moves too funny during the open. Let's just say it like that. You will have some good trend days every now and then, but usually the first 2 hours is just like this grind here, just 20 points up, 20 points down again, and just trading in ranges, right? First here this range, now here that. So this, you rarely get this really good moves that you can just hold. And I don't want to stay in a position here and just grind through that because I'm just looking for a quick scalp. Let's look at it today. Like how long was I trade? It was just 43 seconds, right? But in order to get this 43 seconds of trade, I waited for I don't know how long. Like when did we actually start? If we take it from the open to when I took the position, there was at least 12 minutes or something. No, like actually 14 minutes. 14 minutes. So I waited 14 minutes to then take a 43-second trade, But that is just how it goes. So yeah, just be really patient and then take the perfect trade. So let me just do the recap now. As I said, wanted to have to trade the break of 780. So I wasn't interested in taking it any earlier than with the break above 80. That's why I had my entry right there. We previously moved into 80 but failed, and we're trading in a range between 740 and 780. And then I wanted to take the actual break, and because of how price moved right, here's I had a really good risk to reward ratio, because now I could place my stop at the 60s. Previously, if we wouldn't have this local low right here, I would have needed to place it at least here at the 50s, which now makes a 30-point risk, and I usually stay within 20 to 30 points, so I'd rather take a 20-point risk. Risk to reward ratio with this trade was good. So let's look at it. We moved into the 80s, and then exactly here with the break, you can also see an increase in volume. And that then for me, like moving up through 86 right here, and volume is increasing, that was the confirmation for me that we will move higher. So I wasn't like, once that happened, I wasn't really worried for this trader to go against me. And then also, especially with this move down right here, as you can see, like we moved into 87 and then back down into 80. There's like almost no volume with this pullback, but then volume increases again once we move away. Like the next candle that you can see right here, a lot of volume, and then we grind it up. And now we're pulling back down. Now we're right back here at the 80s. Now I could potentially trade, either move to the downside into 740 or something else. But I'm not looking to take any more trades. That was a really good trade here. Now we're up $190 on a day. And like with fees, $5.20 again in fees, because we just took this 5 micro contracts. That makes a $184 day. So decent day, really good. And then quick note is like, when am I gonna size up? Honestly, I don't know if I will even size up at any point during the evaluation state that I'm trading, because as I said, the trailing drawdown. So I might just stick to the 5 micro contracts. But I might also, if I see the price really clearly, like I did in the previous session, like yesterday's session that I traded, the February 5th, that was a setup where I could have increased size, because it was so clear, the direction was so clear, and it was a really nice trade. And but here also there's like no real place where I could have increased size. Because I usually wait for a pullback. So that would have been here, right? But it already moved 20 points, so I take profit, right? Let me explain it, right? I enter here, then I wait all the way for it to move at least 10 points into my direction, and then a pullback. Let's say we get a pullback into the 80s, and then a move away. Then I would have entered my second position with the break of 90, let's say with a break of 90 right here, and then grind up to 810 or 820. And that is how I increase size. So I mean, the other way would have been if I wait all the way for it to pull back into the 80s, and then I move away with 80s with an increase in volume, which you can see here on that candle, increase in volume with a move away from the 80s. So second position here, and then taking profit. Take profit level 1 would be 800, take profit level 2 would be 820. Or here also something nice forming up. Let's say I put the first short here with a break of 80, then it moves 10 points against me. And then with a second break of 80, I put in a second contract short. But that's just an example. So I might be looking for something like this in the next sessions, so that I can at least give some examples on how to size into positions. But I might not, because But one thing I can actually do is just like start with 2 micros and then increase by 3 to 5, so that we then still just have the 5 micro contracts in risk. Good. Well, that's basically it. Thanks again for watching. If you're interested in joining our firm, becoming a professional trader, and yeah, making futures your full-time career, then you can join my proprietary trading firm, Purta Capital. We're always looking for new traders of all levels, because everyone can like try it, at least try it out, because first you're just trading in a simulated environment, so there's like no risk. And if you are not ready yet to trade an evaluation account at all, just reach out to our team. We can set you up with a free practice account, completely free. And if you think it is something for you, you can continue. If not, then not. And yeah, you will also then get the opportunity at some point to trade at my desk. So I will be coaching you one-on-one. And yeah, that's what I'm looking for, to find good traders, build an elite team. So yeah, to get there, use the links below. We also have a mobile app for iOS, at least. This is also now live. We'll be putting the link in the description as well. And yeah, thank you for watching.